Well, have you seen the news? There is a significant story that has come out in the real estate world, and this has to do with the new Fannie Mae and Freddie Mac rules that have come out around the fees that are charged for getting a new loan. And all of the headlines are talking about how it's penalizing the people with good credit and helping the people out with bad credit. And what we're gonna do is we're gonna talk about that and maybe get through the actual truth here about what's actually happening, because some of what I'm reading in the headlines is a little different than the reality of the situation. So what exactly happened? So Fannie Mae and Freddie Mac, they have something that's called an LLPA. It's a loan level pricing adjustment. And so what happens here is that for people who have different credit scores, and depending on their down payment, they're going to be charged a different upfront fee associated with the loan based on the risk that that person is for paying back that particular loan. Now, we talked about this in my last video because there's also a secondary table that has to do with investment properties, second homes, etc. And we're going to talk about that example and how we're really going to be affected here in the state of Florida by these adjustments. And so what has happened is that this new fee structure came out, and basically what it has done is it has actually penalized people with a good credit score. So if you have a good credit score, say that you're in the mid 700s or high 700s, you're actually going to pay a higher fee now for upfront getting that mortgage than you would have previously. If you have a poor credit score, you're still paying a fee like you were before, but that fee is significantly less than it was before. And so what is effectively happening here is that they're saying, hey, if you have poor credit and you've made bad financial decisions in the past, we want to be able to help you get a loan compared to what you previous could have. And if you are financially responsible, we're going to have you pay a little extra fee because we have to offset the other ones. Now, I don't really love all of that. That's not very fair to those who make a good decisions in their financial history. And I'm going to give you a quick example. If you have a 740 credit score and you're putting between 15 and 20% down on a loan, you used to have to pay a 0.25, a quarter of a percentage fee upfront to get that loan. Now, fast forward to today, that's 1%. So it's a significant increase there. Compared to 0.25, now you're paying 1% of the loan amount up front as a fee to be able to get that loan. Now, for example, if you have a 620 credit score and you're putting 5% down, you're actually going to get a 1.75% fee decrease, because it used to be 3.5% upfront for that loan, and now it's at 1.75, which is significantly lower. So that's a better situation for people who have poor credit. So let's run a pretty common example of what we see here in Southwest Florida. Let's say that you are a responsible person. Let's say that you are now getting into retirement. You've worked very hard your life. You've made very good fiscal decisions throughout time, and you want to buy a second home in the state of Florida. Very common scenario that happens here. Now, what will happen? So if you have a 730 credit score, you're automatically going to have a 0.75%. If you're putting 25% down, by the way, 25% down on a second home, you'll have a 0.75 or 0.75% upfront fee. Okay, so that happens whether this is a second home or a primary residence. Doesn't matter. If you have a 730 credit score and you're putting 25% down, you're gonna have a 0.75% upfront fee. Now, the kicker in all of this is that at that loan level pricing adjustment, there's also that second table that deals with second homes. For a second home, there is a 2 1/8%, 2.125% fee that is going to be put on that new loan. And so if we add, what we have to do is we have to add those together. We have a 0.75% plus 2 1/8 is we have 2.875% upfront fee that needs to be charged in order to have this loan be backed by Fannie Mae or Freddie Mac. They do 60% of the loans in the United States of America. That's a really really big deal. And in fact, this is such a big deal that I think people are going to start to look at alternatives. People, first of all, we have a lot of people who buy cash, okay? I think that's going to further accelerate that people are going to be paying cash. Otherwise, on a second home, maybe you have a lot of equity in your home up north and you want to pull out a home equity line from there and then pay cash down in Florida. We'll see a lot of that happen as well. And then alternatively, there's the option that people borrow against their investment accounts. We've seen a lot of that compared to what we used to see. When money was cheap, people would just get a mortgage. Now that money's not so cheap, I don't think that's going to happen nearly as much. And so I do think that this further restricts what we're seeing from a mortgage perspective. Now, the one big deal here is in this scenario, we've got a financially responsible buyer who's buying a second home who now has 2.875% that they have to pay upfront of the loan amount. And the lenders, by the way, are restricted in that they cannot charge the borrower more than 3%. And so all of a sudden the lenders are starting to have a little bit of handcuffs here because we've got a really well qualified potential borrower and we're running up against the limits of what they can charge. And so let's say their credit was not 730. Let's say their credit was worse and their upfront fee was higher. Now we have a scenario where either the lender cannot do that loan or they have to eat a certain percentage of that. So let's say that it was 3.5% upfront fee. They can charge the borrower 3% and then they have to eat the other 0.5%. So some lenders may not even do that. And it's just really interesting to think about how this is all going to shake out. And now the only way to avoid any upfront fees is if you have a 780 credit score or better, and you're putting at least 25% down. Isn't that crazy? So think about that. In the past, you would be able to put 20% down and not have an issue. Now you need at least 25% down and a 780 or better credit score. Now, the more money that you put down, the worse that your credit score can be. However, that's the minimum threshold, is that you need to put 25% down and a 780 credit score to have no upfront fee. There's not a lot of people who fit that criteria in the world. Right? There's just not that many people. And so this, again, is this a good thing? I'm not so sure it is. Does it help people who, have lesser credit scores be able to afford a home? It absolutely does that. And I think that's a good thing for home ownership. But I'm never in favor of penalizing the people who've made good financial decisions in order to subsidize somebody who didn't. I'm just not. It is what it is. What are your thoughts on this? Is this a good direction, a bad direction? Tell me in the comments below. Would love to hear from you. And please remember to like and subscribe to the channel. Hope you all having a great day. Talk to you soon.